just to quickly address a local story that has been making headlines here, and that's finally a hike coming in from the Delhi Electricity Regulatory Commission. What does that mean for companies? Is this a sign that we are moving towards an era of better power sector reforms? Mr. Lalit Jalan, CEO of Reliance Infrastructure, joining us on the phone line. Sir, good afternoon. Thank you for being here with us. Let me first try and understand how much of a help this is for Reliance Infra. Can you give us some sense of the impact this will have on your Delhi distribution operations?
Yeah, good afternoon. Let me just give a brief background. The power purchase costs account for 80 to 90% of the total costs of a distribution company. And the Delhi distribution companies source 100% of their power from leading central and state utilities like NTPC, Delhi state generating companies, NHPC, etc. In fact, our largest supplier is NTPC, which supplies 70% of Delhi's power requirement. Their rates are approved by regulators. Now, the power purchase costs have gone up by 300% over the last 10 years. In fact, in the last year itself, NTPC power purchase costs have gone up by 31%. And during this 10-year period, including the hike of last year, the total consumer tariff increase has been barely 35%. This has led to all the distribution companies bleeding heavily. Current losses were at almost 2 rupees per unit supplied to the consumers, and the Delhi Discoms combined were losing almost 20 crores every single day. This current order will bring a lot of relief to the power sector. We will now be able to pay for the power in time, which will ensure that the citizens of Delhi will continue to get 24/7 power, which we have been supplying for the last couple of years.
So, Mr. Jalan, let me first ask you, this loss of 2 rupees per unit, does it get wiped out now with this tariff increase, or will you still be incurring a loss?
No, I think with this tariff increase, we will have to see the fine print in the detailed tariff order. But my initial understanding is that this tariff increase will ensure that the current bleed will stop.
We've seen a hike, a minor one in February. Now we've seen another hike in June. Is there any need on the Delhi side for further tariff hikes, or do you think right now, with the way things are, the business can generate a more attractive return on investment?
Yeah, see, the returns of a distribution company are totally regulated. So it is not like if my power purchase cost goes down, I can make supernormal profits. Any decrease in cost will be passed on to the consumer. And conversely, if there's an increase in power purchase cost owing to, say, increase in cost of coal or freight or whatever, that will be passed on to the consumer. That is how a distribution sector works. Having said that, if you really see, Delhi after this tariff hike also is the cheapest source of power for the residential consumers amongst all the metros. Not only that, it is still half the price of Gurgaon, Noida, if you consider 24/7 power supply.
Sure, sir. But would you be still pressing for another tariff hike this year?
No. This tariff hike takes care of the current costs. As long as the power purchase costs remain in control, there is no need for further tariff hikes.
Let me also understand, sir, and correct me if I'm wrong here, but the way this is calculated or rather shown up in accounts, most analysts are not expecting any marked improvement in the quarterly profit and loss, because a lot of this is shown and is capitalized over time, and it's shown as receivables under regulatory assets, the head of regulatory assets. So what changes, if at all, for the September quarter when we get the actual earnings report card?
Yeah, no, what you're saying is correct. The distribution companies do show the regulatory assets as a credit item and end up showing a profit. However, once the regulatory assets are approved by the commission, these regulatory assets become guaranteed. Up to now, till the time the regulatory assets which a distribution company shows in their balance sheet, the investors are not very convinced that you will be able to recover all these regulatory assets. So there are two things happening. One, the increase in regulatory assets stops. The regulatory asset starts becoming cash. So automatically your debts will start reducing over a period of time. which becomes very bullish for the electricity sector and the company.
So, sir, coming to final thoughts, the market has been a little disenchanted with the way regulation has been in the sector. Would you say that this could be a sign of better things to come? Would you expect more hikes? I mean, you're also there in Mumbai. Would you be expecting a hike in this circle here? And what next, really, when you're talking about the power distribution business, or even generation for that matter? I mean, Reliance Infra and Reliance Power are in that side of the business as well. And we know the whole contentious issue of fuel linkages and whether fuel should be linked to the power purchase agreement. These are very deep issues that the sector is confronted with.
No, absolutely. I think you have raised lots of issues. But let me just give you a brief history. Between 2004 and 2011 or 2010, what you're saying is absolutely right. There were very, very few states giving any tariff increases, and leading to the state of the state utilities, including private utilities that we see today. 2011, I would say, was the first turning point, and we saw almost 16 states coming out with a tariff increase, and many of them in double digits and many of them above 20%. 2012, in the current financial year, has seen the same trend. This is the 14th state giving a tariff increase. We saw Tamil Nadu giving a 37% tariff increase early in the financial year. This is Delhi giving 21%. So even states like Bihar, Chhattisgarh, they have both the years they've given double-digit tariff increases. So this is a very healthy sign of things to come. However, owing to the huge under-recoveries of the past and the gaps which have been created in the past, if you would have seen the chairman of CERC saying that you might see 3 to 4 years of tariff hike before costs become reflective. However, in metros like Delhi, now the costs have become cost reflective. So there will be respite to the Delhi consumers in the future.
All right, Mr. Jalan, we'll leave it on that note for now. Thanks so much for taking out the time and explaining this to us.
Thank you.
All right.